So, Jerome Powell just confused the markets even more than was humanly thought possible, along with PCE and GDP being on deck this week. We're going to be discussing exactly how you should be playing this move, as the market is maybe setting up to be a little bit of a down week, which could be a buying opportunity, including talking about SOFI today, that is gaining quite a bit of momentum, but not only applying what we're seeing with SOFI to the broader financial markets and how this could be a killer opportunity for all of you guys. So let's dive into this. First of all, we got what happened with Powell, right? We saw the press conference and it was quite interesting to see how he was fiddling on his own words, kind of a Biden-esque moment almost. But again, it was as expected. Powell is political. We're not seeing anything different that we didn't say 2-3 months ago, where the Fed is going to be holding rates for an extended period of time. This means that more people are going to be hurting with their mortgages. More people are going to be hurting with car payments. And we're going to also see later this week the expectations for inflation, because we're going to see the PCE numbers, which is going to be the slow inflation metric. And then following up with that, in a couple weeks, we're also going to get the CPI print that I personally do not think is going to be super rosy. That is mainly due to oil prices, right? We saw oil prices on the move due to the conflict, and we'll be discussing the conflict in this video as well. But we can see here that oil prices are now at a net zero on the CPI report. So that is a 3% negative that will now turn into a zero, leading to the natural conclusion of higher inflation. And the Fed will then use that to justify that we're going to be here for longer. Powell continuously reiterated that the U.S. economy is perfectly fine. We will also be getting a GDP print. So this week is going to be the official, meaning there is no more revisions after this, along with net spec that we will get on Monday, which is going to be also interesting to see if they're adding or subtracting from their net positions, because sentiment is kind of sitting in this mugh area right here, where we're sitting at 55 right now. So either team can take the home win. However, we can see that Powell will also be speaking on Wednesday. Is he going to try to back up his narrative? Is he going to give us any more insights? Is he not going to comment on monetary policy, which is something that we have seen Fed members do, where they're just not commenting on monetary policy? But more importantly, PCE prices and GDP. GDP expected to still be negative for the quarter. Again, they're using the previous number because this traditionally doesn't change, but it would also be surprising what Powell said, that he sees 1 to 2% growth this year. Does that mean that it's going to be a positive quarter, or is it going to be a more negative number that's followed up by a higher positive number in the preceding quarter? Throw down in the comments section below what you guys think it's going to be. But again, more importantly is the PCE number. The PCE number, we do not have expectations yet, so make sure you guys are subscribed to the channel so you know when the video comes out that we'll be talking about this stuff right over here. And again, core PCE is the bedrock of what the Fed is seeing. Core is expected to not really increase much. We do see income going down while spending is going up, leading to the natural conclusion. Is this going to be bullish or bearish for the economy? What is the PCE month-over-month and the year-over-year going to be? Previously, it was 0.1. So, of course, coming in 0.1, I would expect PCE to essentially be flat. But it would also be very funny if it comes in at 2%, because that is the Fed's target. And a lot of people are talking about how the Fed is out of touch. And I fully agree with some of these people. We see that Powell is out of touch with people on car loans and mortgages. Again, people have been buying up these loans expecting rates to come down, and all rates have been doing is basically do nothing. They're absolutely doing nothing, and they will probably for the foreseeable future do nothing. I would not be surprised if by October we will still see a 4.3% 10-year yield, because there's no sign that the Fed is willing to cut. They're very hawkish on the thought of cutting, but they're also very dovish on the thought of hiking rates, right? So they're in this stagnation period where you essentially could snuff the economy out. You could start seeing degradation. We also had several Fed members come out this week and basically say, well, we're thinking about rate cuts in the future, but if this and this and this happen. But I'm like, aren't you kind of putting the horse before the court and essentially waiting for that disaster to happen by saying the disaster may not happen, but then through your action, you're actually establishing it? It's very It's very, very confusing. I don't try to understand it anymore, but let's talk about some opportunities. A lot of opportunities floating around SOFI. SOFI recently, again, this is having a breakout period right here, kind of similar to how NVIDIA and the financials are doing if we look at JP Morgan. But the reason is their profit margins that they basically came out with this in conference are absolutely insane. So everyone's really, really buzzing about them. Social media has been buzzing about them. So this could definitely be an interesting opportunity. On top of, we're seeing here, again, this was the bank sector that's getting into the whole AI thing, was part of Trump's thing. So again, this is a top contender company. I do like them here because you're establishing a range that you're already coming above, right? We have previous resistance now became support around $14, pushing to 15, trying to tackle these upper highs here at 17, 18. It's an absolute killer opportunity right now, especially heading into the earnings that JP Morgan's be kicking off in a couple weeks. So if you want to get in early on SOFI, this probably be the thing that everyone will be buzzing about. I could definitely see this being just a standard head and shoulders kind of form right here, where we're now going to break the neckline and head up higher. We can also see kind of a cup and handle forming right here, which is resulting in further appreciation. That would put us roughly, if we're targeting the cup and handle, we can see that this is projecting up till $21, $22 around there. So that could be an interesting buying opportunity to get into SOFI. Now, there's also plenty of more opportunities. Let's say you want to be stable, cool, and collected. We have the market, right? The market right now did actually have a weekly breakdown, leading to more downside potential. Again, looking around this 200-day moving average. So are we going to get a dip? Are we going to form the cup or the handle on this move, right? This could just be one massive cup and handle forming right here. So any depreciation down to 590, 579, not breaking the 200-day moving average would be a buying opportunity on the market. So if you're looking to get into the market, definitely this week would probably be the week to do it, heading into PCE, heading into the GDP number as tensions rise in the Middle East. Also the NASDAQ as well, having not a weekly breakdown, but a failed weekly breakdown. I would expect tech maybe to come down to 517 number on the NASDAQ, form that cup and handle, form that little pullback, establish a higher high, because again, our previous relative low was sitting at 511. 517 would be a nice round number to establish high. So definitely be looking to pick up tech there. Some of the buys I'm looking at this week is Amazon to push down to the 200-day moving average, leading to, again, the cup and handle, inverse head and shoulders forming there. Meta to have a little bit of a pullback, maybe to about 662. That's where I'd be a buyer there. And NVIDIA, just keeping an eye on it to see if it has any pullbacks, about to have a golden cross right here. So we could be setting up for NVIDIA to have one crazy week. One of the things I noticed that when the market was selling off, NVIDIA was failing to do so. Strength becomes strength, and thus leading the market higher. Is NVIDIA going to be the leader again in the market as it previously was? And also we can look on risk on assets like Bitcoin kind of coming down, forming that flag pattern, looking to maybe retest their 50-day moving average. So again, there's a lot of opportunities out there in the market. We can look at some of the bad indicators like VIX holding below the $20 mark or the $21 threshold. So the market's still elevated because we have all this war going on. And again, the United States deciding to do some crazy stuff by sending B-2 bombers are on the move now towards Guam, which is, again, a closer strike point to the Middle East. Again, these are the bombers that drop the big boys. They also drop the bunker busters. So this could be spurred on by Iran's comment that, well, if you're not trying to get the U.S. to not bomb you, you pretty much failed at this epically, because they were talking about how it's striking Israel targets is very effective, but they also mentioned targeting U.S. bases in the region is easier than striking deep inside Israel, kind of insinuating that you want to go drag the U.S. into this, and the U.S. basically took it as a, okay, you want to play that game? We're going to play that game. And so leading to more tension. So I would not be surprised if the VIX spikes early on Monday, Tuesday, market pulls back a little bit, because again, we're going to be looking at B-2 bombers moving into the region. So that is going to be an extremely, extremely heightened point in everything, and leading towards oil prices pushing up as well. So expect oil to maybe hit $77 a barrel, maybe possibly 80 this week, with the tensions escalating as they have been through the week. So again, Keep an eye on oil prices. That's going to be the main driver. If it crosses 82, that's really going to be bad because that's going to lead to a higher inflation number in the preceding months and therefore leading to Powell basically giving you maybe even one rate cut this year. Considering I do disagree with him completely that we should be cutting rates right now because the economy is basically needing it, right? And consumers are not happy. They're not really looking to spend. It basically is a misery pit for as long as we know. And everyone's like, oh, just start businesses and do this. Well, in order to start a business, you have to have money saved. If you can't save any money, then how can you buy businesses? How can you grow wealth? That is the main thing that a lot of people are looking at. Again, we can see the Michigan inflation expectations. People are not looking to spend a lot of money. They're basically miserable. They're just living paycheck to paycheck. We can see that with the long-term expectation of fear and greed. As soon as we get to greed, we just go right back to neutral. So the true risk on rally hasn't even actually happened. Even though the recovery of the S&P led to a massive boom, it has not spurred the risk on rally. We've seen Bitcoin just hit 100 and stagnate. We're expecting 125 from it. So what is going to be the thing that ignites the flame in the market? Is it going to be Powell? Is it going to be Trump? Is it going to be cessation of hostilities in the Middle East? Or is it going to be something else? Is it going to be the financial sector kicking things off with a bang? So again, throw in the comment section below what you guys think. Thank you all so much for watching. I'll have the latest 2 videos linked over here for you guys, along with some interesting facts down below. And also the Discord linked over here if you want to join. Make sure you guys subscribe to the channel for more videos like this. Thank you so much, and I'll see you in the next one.